All right, finally, we're good to go. Good morning. Hope you had a nice weekend. I moved my kids into university again. Go Dogs! All right. All right, so good morning. Welcome to Forex.Today, the YouTube community of more than 21,000, almost 22,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of our planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's see where we stand going into the market open. Look at that, 78. Ooh, love it. So S&P 500 up. Now, VIX is still below 15. That's great. I mean, we're tickling 15, but there's still a 14 handle. It's up on geopolitics, but it's still relatively okay. Maybe it's high for this time of year, but it's not high relative to where we were before. Bitcoin doing nothing fast. Gold hanging in there around 4,500. That's good. That's good. Now we got to like test that and test that and test that and wear out the sellers and then take it up to the next level. WTI, hey, I'd like to see that at 68, but 82 it is. Dollar still below 100. That makes me happy. And oh my goodness, there's a lot of money out there. Lots of money, and it's chasing the stock market, not the bond market. So they're going to have to compete with the stock market that's pumping out 20%. So to do that, they're going to have to raise what they're paying investors. Let's get an update on the headlines. Indian rupee, RBI move tightens liquidity. BNY.
Bond market holds range as dovish US data clash with Persian Gulf supply risks. Japan. BOJ path questioned on weak demand. Societe Generale. Euro-yen price. Forecast. Bullseye 185 zeros resistance area.
Economists agree. Fed to leave interest rates unchanged this year. Reuters poll.
Zcash price. Forecast. ZEX extends gains amid rising retail strength. Ironwood pool adoption. Japanese yen. Intervention risk near 160 highlighted. DBS.
Gold holds near $4,400 as fading Fed rate hike bets weigh on US dollar.
Canadian dollar gains ground with inflation data set to test Bank of Canada outlook. China. Growth risks rise into H2. Commerzbank. Wall Street poised to open broadly up.
Cool. I don't know if you use this feature. I built this for Jim. He said, hey, can you make these clickable? Yeah, I can. And I did. Okay, let's do our risk analysis. Oh, good. That's good to know, Jim. Now, I told you to be cognizant of the methodology in the background for this risk radar to become even more sensitive, and I'm not sure how that will impact the scores. I don't think these scores will like jump to -20 or +40, but we're doing extraordinarily more math even though this was very math heavy, we're doing the Pearson correlation coefficients to tie in the weighting in real time to actual market conditions. And then also using the Pearson correlation coefficients to get rid of this hidden assumption. Back when traders used large language models that were publicly available, I think Gemini was a big one that we used to use. We don't use them anymore because they say stupid things like inflation's high, or just something like gold is a safe haven. Did you know that that's stupid? Yeah, this is why you can't use publicly available data like that, because it's just dumb. It's full of assumptions, and it's racist. So what this is doing, for example, is it has no assumptions, and so it says, what is gold doing relative to VIX? And it's a bigot too, right, Denise? So anyways, we don't make any assumptions like that. So it's constantly looking at, like, how does gold move over the last 90 days relative to increases or decreases in risk. There is no assumption. It doesn't say, oh, gold is up because it's safe haven flows. Well, that's dumb. You really have to start to buy into, like, that is an assumption. And sometimes it's right, but often it's not. So we don't do that. And so I went to an extra layer of mathematics around this data because when I did an audit of this, there were baked in old assumptions, and in particular gold. This, and I need to take this out, safe haven. But it was saying gold up, therefore that's risk off. I'm like, well, why? Why are you giving it a negative score? Oh, well, it's safe haven flows. I mean, why would you guess that? I'm like, I never taught you that. I never gave you that assumption. I never told you that gold up is bad. I said, why don't you take a look at your own data, right? Which is over here under fundamentals. You got to go over here in correlation coefficients, right? And I said, use that. You don't have any assumptions at all. And so based on what is actually happening right now, okay, money going into gold is good. So we have different scores. And it's just, imagine now, it's always watching the relationship of all these assets relative to each other and relative to risk in real time. And then changing things like the weighting and the 1 day, the 7 day, and the 30 day, and it doesn't guess on direction. All right. So anyways, way cool. Way cool. Very, very cool. So anyways, what does it tell us? Nothing's happening right now. Okay. So how do you go in this? Aggressive? No. Okay. You don't go into the market aggressive today. You wait for things to set up. Maybe you use smaller lot sizes, which is, I think, better than not trading, because you can get lethargic. So on a day like this, you're like, well, I'm a bull. Let's say, I don't know if you're a bull, but you might say, look, I'm a bull, but the markets are quiet right now. So I'm going to limp in with micro lots instead of mini lots and just test the waters. Cool, right? Yeah. Good dispersion. Let me check again for the 15th time. Hang on. Okay, so anyways, we'll take a look at that. Just need to while he's working. Okay, what's going on? Yeah, well, crypto down, which is what has been our thing. Yeah, Doge down, Solana down, Binance. Notice that for those that trade crypto, notice that we went from 2 assets to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That's nice, right? Again, I want to look at the full market. I'm just looking at, okay, let me get my drawing tool. Boom, 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 boom. There it is. All right. So the first thing that you want to do is you want to look and you're just eyeballing for a couple of things. Mathematically, what you would do first is find the average, and then you'd calculate the standard deviation from the square root of the variance. Or you can just eyeball it and you're going to get that. Why do the math, right? So, anyways, you're going to get something like this. And what you're seeing is most of the time, things are as expected. Most of these assets are moving as we have scored them. Okay. Cool. So no real surprises there in general. Right? So everything in this quadrant is supposed to be down today. Everything in this quadrant is supposed to be up today. So it's only a few of these crypto and yields really. And okay, fine. That's it. Most things are behaving as we would expect. So these conviction scores are coming from our fundamentals section. So if you've been following our fundamentals section, the assets you've chosen to trade would have been somewhat correct. Cool. Looking at the stock market, Nikkei's still doing great. This is one of the things that we've been loving. In fact, I should probably pop those charts up pretty soon. We've shown them just working tickety boo. Boom, 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 boom. That's from before. That's us having oil long. Do, 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 do. So we'll get that to that in a little bit. Let's see. Let me expand that. And I'll just leave this as a reminder that we want to do international stock markets. Beautiful. Just cray, huh? Hey kids, that green zone that we've mapped out a month ago, it means up. Wow. Cool. Yeah, let's get back. Get back. Cool. What's going on in Forex? Dollar week, yen week, dollar week, yen week. Oh my goodness, isn't that exactly what we were hoping for? We also wanted Swiss franc weakness, and it's quite neutral. Blah 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 blah. Kiwi strong, dollar strong. Now Kiwi we don't love, Aussie dollar we love. And we have that, of course, in the fundamentals tab as well. Gold doing all right. Food doing all right. Corn, I think, is a glitch in the matrix. I yelled at him just a few seconds ago. We found it was a decimal issue. And he fixed it. And then it came back the next day. I pointed it out again. He fixed it. And now it's back. I'm like, what the heck? Fix it. But anyways, food up, natty down. Now remember, there's a big difference between the oil market and natural gas market. Natural gas is a local market. So you could have natural gas in the United States down and natural gas in Europe way, 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 way up. Okay. I need to add the whole yield curve here. I'll do that. Don't you worry about it. We'll have to do a vote. We'll have to do a vote if we should tweak this or kill it. One of the things I asked you to do a few months ago is try to figure out how we can use this to our advantage, play around with it. What data do you look at? %90 chance that the Bank of England does not raise interest rates in September. It's 32 days from now. Do you care? The skew is to an 25 basis point increase, but it is a thin tail. It's cool, right? And this has been changing. So this 25 basis points increase is actually something new. I think there's got to be some value to it, right? Bank of Canada interest rate decision. Look at the skews, different. 7% cut, 6% increase, 89% no change. That's 72 days from now. And you can watch the direction of the change. It just plots it for you. ECB interest rates in October, 73 days from now. No change, slight skew to a hike. It's got some potential, don't you think? Bank of Canada interest rate decision in September. It's just over 2 weeks from now. No change. Here's the November. Here's the SEP. Look at this. 87% chance of a 25 basis point rate hike by the ECB in 24 days. What do you think? It's got some potential, right? Remember, these are votes based on money, the best kind of vote. Bank of Japan interest rate decision. Big changes here. Whoa. Okay. Now, 75% chance of a rate hike in 33 days by the BOJ, but it was higher. People are changing their minds very quickly, moving toward no change. So you want to watch this 24 increase. And that would be good for your yen carry trades. Mexican GDP, core PCE. Cool, right? Mahai says, Wayne, I love you, but you still think the Fed controls inflation. When did I say that? I said the Fed has zero control over supply side dynamics. None. That's what I've been saying, Mahai, for, I don't know, 8 months straight since we've been in this situation. The Fed has no impact on supply side. They're at demand side. So I don't know what you're talking about, brother. Brothers of the same mind, unblind. Just now going through our reaffirmation. I love Aussie. Okay. We like Aussie. We like Aussie. You see that? Cool. Got to stick with that. This we already know. When I said crypto down and it already fit our bias, this is what I meant. I did a big speech sometime last week. Must have spent at least 30 minutes talking about right, be a bear or be a bull. Just pick one team and make sure it's logical. In this case, I look at it and like I was very bullish in July. Now it's August. Now I'm bearish. Crypto. Does that mean crypto's going to go down? No. It means I'm a bear. And when I get lower highs, I have permission to sell. Cool. Look at this. Gold up. Nice. Well, I'm a bull in gold. Yeah. How nice is that? I was a bull when it was 4,000. It's 4,500. I'm still a bull. So I try to buy dips. Okay. Now I was asked, and therefore I shall deliver. I was asked again for me to go step by step on how to buy a dip. Okay. I can do that. But knowing to buy the dip is way more important than how to buy a dip. How to buy a dip, you can do it a bajillion different ways. Meta's double dipping. Hey, Meta. Meta's, yeah. She's in the YouTube live stream and she's also in the room, which is cool. So anyway, so you wake up in the morning and if you find a lower high, you sell Bitcoin. If it makes a higher high, stop selling Bitcoin. But we can get into the technique if you want. I also wrote a book. I also have a training course that's 100 hours long of lectures, not psychobabble, that I tend to do. Lectures, and it's $88 a year. So I'm like, there's plenty of ways to learn that. There's also YouTube videos. If you go onto the FX Bootcamp site, there's a training course there. It's about an hour and a half, I think. And it does leading and lagging indicators and oscillators and Fibonacci and a bunch of stuff. Yeah, but all of that is easy. I think if you know what assets to pick, you could be an extraordinarily mediocre technical trader and still do fine. Because you're trading the right thing at the right time for the right reason. Yeah, but whatever. Like I said, I'm happy to go and show you how to pull the trigger. Okay, that's the fun stuff. So now we got to go to our COT. And we're bearish on crypto, and we got down, 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 down. In fact, we can zoom in. Not much love for these. Now, remember, we were very, very, very bullish on Ethereum in July. Now, I want to talk to your psychology, so please respond to this. Do you remember being very bullish on Ethereum in July? Do you remember? When we fell in love, we were young and innocent then. Yeah, thank you. Okay, cool. But the market was short. Yeah, long-term short. But we were short-term long because we had years and years and years and years of data. So that's alpha to say the market is bearish and the market has been bearish for a while, but our ability to beat the market through research and analytics was that Ethereum should go up 22%, and it did. But we also knew that the next month, which is now, okay, August would be negative. And in fact, if you kept buying Ethereum, you would give it all back and then some. This is what we discussed in June. June, Ethereum was down. I think May, Ethereum was down. Maybe even April, Ethereum was down. But for some dumb reason, no. Through analytical research, we knew high probabilities of July being up. But then if you were a hook, right? If you were a fish in water and you swallowed the hook, you would be addicted to that beautiful Ethereum rally. And you're like, this is going to go up forever. And then you would have lost all your money again. So our analytical research says up in July, way up, but then down in August. So we were able to flip, not flip-flop, but just knowing what probabilities are. You don't know what the next card in the deck is, but you know the probability if you're counting the cards. Oh, yeah. Thank you, Jim. Hey, for all those that are watching on YouTube, just visit here. Let me pop it in here. Is this YouTube? No, this is YouTube. I'm watching both. If you go there, the only thing that's required is an email address. And I promise you, I don't put you into some sales funnel. If you don't love what we do, I can't convince you to do it. But most of it's free. So if you don't like me reviewing the COT, I can't convince you that the COT is important. Most likely, you look at this and go, oh, this is amazing. Well, good. I don't need to convince you of that. So anyways, it's free. Sign up. And so the reason that I do the internal streams, well, we do more than one a day, but the other thing is there's zero lag, where YouTube just lags. It's YouTube. It just lags. All right. So anyways, so guys, we were bullish in September. Here we are, October, because remember, I have to bring this up. This data came out on Friday, which was Tuesday of Friday. So you might say, this is about a week old. Well, okay. But it is the most current data from the government. I get all of this from the government. And guess what? Boom! Our research says it should be down, and they are selling. But don't forget, 2 weeks ago, this was huge green. We're looking in front of institutional investors, and then we can see what institutional investors are doing, confirming or denying our hypotheses. We're building our trade plans around insider information. It just happens to be legal and ethical and compliant. Right? So, for example, you can just go here, cftc.gov. You can go to the Commitment of Traders report. You want the financials one. Here it is. Okay, there's the data. Look at this, guys. It's crazy. All you have to do is do it. Canadian dollar, Swiss franc, British pound. I did this 20 something years ago. I would download this report. Japanese yen. FX. Okay. Now, and it goes on and on and on. Look at this. Look at this data. Just whoa, 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 whoa. NASDAQ minis. Russell E mini. Just look more. So look at U.S. Treasury's 2-year note from the Chicago Board of Trade. Okay, you want to look at dealers, you want to look at asset managers, you want to look at hedge funds, you want to look at other reportables like hedgers, not hedge funds, bona fide hedgers, and then non-reportable, which is retail. Mahais is full of bugs. What were you talking about, like 2 years ago? All right. So anyway, so we break it all down, and then you can see how amazing this is, right? When you look at like hedge fund managers, for example, they're like you. They want to trade today to make money. So when looking at the 2-year treasury, there's 618,328 long positions, but 2 million short. Whoa, what? Hey, guess what? Yields are up. Why? Well, hedge funds are shorting the heck out of it. So this is what I mean, like buying a dip is the most simple thing, and I will cover it. And I'm not belittling those that want to do that type of technical analysis. I'm happy to do it. You have to know how to pull the trigger. I think we all agree. But if you don't know this, then you don't know how to trade this asset or why you're trading it. You're just, whatever. And so I hope you agree with that. So I'm downloading this information every Friday at 4 p.m. And so we do look at the 5-year treasury. It's in our yield curve analysis. Also, often traders will report retail positioning and sentiment. This is where we get that. Now, the cool thing is, 20 years ago, they didn't actually write this down for you. So it's way easier, kids, than it was back in the day. Back in the day, you would have total number of contracts, and then it would tell you hedgers and hedge funds and asset managers, and then the dealers, and then you'd have the total number of contracts. Then you add up all of these, and then it didn't add up to the total. So the leftovers is this, and now they're reporting that. So it's so easy, everybody, but I just find that this is easier to understand. This is where that data comes from. Okay. Now, the market used to love the Mexican peso, and the market is still buying some, but the percentage is changing. Sorry. Okay. So money flowed into the dollar last week. Still buying Aussie. We love that Aussie. Still selling Kiwi. Okay. You're like, Wayne, why are you so bearish Kiwi? Kiwi is up today. Well, institutional investors are heavily short the New Zealand dollar and they are still shorting week over week. Think of this as like kind of like month over month. Like they have been shorting, they are short. Institutional investors are short. Asset managers are short. Hedge funds are short. And they added to their short positions last week. So New Zealand dollar is up today. So what? What do you care? How do you know it's not just the shorts taking profit? It's up today. So what? That's the next level. Hey, New Zealand dollar is up today. I don't want to buy it. Go ahead. Because the buyers might be the sellers, which is weird, right? So if you're short and taking profit, the market, in this case, your dealer, your broker, has to offset the short position with a buy. So you can have green candles for 3 or 4 days and there are no bulls. The price action is from bears. Bears are buying, which is way different than bulls buying. Now, the way to handle this technically is to say green candles don't make you bullish. Do you know what makes you bullish? Double bottoms with a higher high. Then you buy a higher low. That's what makes you bullish, not a green candle, a series of green candles. A triple bottom with a higher high. A quadruple bottom with a higher high. Then you're going to buy a higher low. Okay? And not on a 2-minute chart. That doesn't tell you a change in trend. You're just measuring volatility. But on an hourly chart, 4-hour chart, now you're just determining, well, is it a day trade or is it a swing trade? Okay. But just imagine if you were a bull, you don't care about green candles. Green candles could be created by bulls. Green candles can be created by bears. So you like green candles, but only created by bulls. That means you actually have to have buyers buying. You need actual accumulation, not bearish decumulation, right? So from this case, you'd wait for a double, triple, quadruple, and then higher high, higher low. Why would you do that? Well, bulls only buy higher lows. So if a market has dropped and then you see a bunch of green candles, that's not bulls. Bulls buy red candles. Bulls buy higher lows. Okay. Now, Mahai says over on YouTube, yeah, Kiwi's up for today. So maybe is a lower high, which means opportunity to sell. Yeah. Okay. For sure. All right, let's go back. COT, this is important. We got to go back to COT. So we don't like Kiwi. We love Mexican peso. We don't like CAD. We want to sell yen. Dollars getting closer and closer to neutral. But remember, over the last several months, we were long, heavily long dollar, probably around Canada Day. The market got very long dollar, and we've been treading water, okay, ever since. So what we want to look for, if you want to be risk on, now you might be a risk off person, totally fine. You'd want to see this position grow. If you're a risk on person, you want to suddenly see this turn red, and 2 or 3 weeks of this being red, this will probably turn red. And now you're not just bullish, but bullish and aggressive. But Mahai's point, hey, well, if Kiwi is up today, maybe it's an opportunity to sell tomorrow. That's the whole point. You just connected with what I've been saying. That's 100% correct. I just don't know if it's going to happen or work. But why you would go to your Kiwi pairs and say, well, I don't know what's going to happen next. But my conviction is the Kiwi dollar is weak relative to other currencies. But it's strong today. Great. Cool. Now do some technical analysis and see if you get an opportunity to sell that Kiwi dollar later today or tomorrow. That's the whole point. So no love for euro right now, but no hate either. Just there's no money going into euro. So if you're trading euro, you're actually just trading the other currency. So euro dollar would be down a little bit, but not dramatically. Okay. Are you trading euro Mexican peso? That might be good. Are you trading euro Aussie? That might be great. Are you trading euro CAD? That's just dumb. You see how important this is? Now, for those that are itching and scratching, you're like, Wayne, just tell me what to do. Just tell me to buy. Just tell me to, should I jump in? I'm like, dude, just calm down. We're setting up the entire week quantitatively. And you should be meditating on this stuff. Like, oh my God, this Kiwi has been negative for months and months and months and months. Yet there have been periods where the Kiwi dollar's been strong. Not the majority of the time, but I remember 2 or 3 weeks in a row, Kiwi was ripper strong. Not just strong, but like the strongest. Yeah, well, guess what? Bears were taking profit. Now you can take advantage of that and know to be short-term long, and you're just day trading it up, going, this is bears exiting for profit. Cool. But you also know to be ready for the next move down, because that's what we're trying to do, right? The next leg down. So imagine you have a very bearish market. Okay? Market is bearish. So you have to understand the context of if it's up for days or even weeks, depending on your time frame, the real money maker is, okay, on a smaller time frame, being ready for this because you know, or you're anticipating, okay, your trade plan is that it's going to collapse because the market is heavily bearish on this asset. So your trade planning on a 15-minute chart or a 1-hour chart is going to be around this point, which might be a pivot point, might be a Fibonacci, it might be a moving average, yada, 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 yada. The thing is, you're just waiting for the drop lower high, and now your 15-minute or 1-hour trade could fall for 3 weeks. And what I'm trying to tell you is, if you understand the context of your trading, your scalp could be worth 1,000 pips instead of 12 pips. If you just understood where on the map you stand. You're like, dude, you got a good trade here. Why would you be happy with 50 or 100 pips? Oh, because I'm so excited to have triple digits. Stop that. Okay. Your trade plan has a target. Your target isn't 100 pips. You're so happy to have triple digits. In many times, in many sort of, in the context of many trades, 100 pips should be embarrassing. I have to break your mind. Stop being excited about pulling 25 pips out of the market. You're never going to achieve your destiny. Okay. Just trust me on this. Drop your lot size, trade 10 times more trades. Okay. Go from minis to micro, but make 10 times more trades. And then since every trade to you seems like it's worthless, then let them run. Just see what happens if you're like, well, this is going to drop 300 pips. And since it's only a penny a pip, I'll just let it run. Good. You're growing up. You're like, well, Wayne, I won't make any money. I don't remember going to Harvard and they're like, hey, man, welcome to Harvard. You're going to make a ton of money here. No, it's an education. You need to know how to do it. I want you to think about this. I know somebody that just raised $3 billion. And they're now trading $3 billion. 6 months ago, those accounts didn't exist for them. So one day somebody said, yeah, you know what? I'll give you $3 billion. And now you have to trade it. So if you can't handle micro lots, dude, just imagine one day you're like, it's your first day. You finally got these accounts open. They transferred the money. You're like, you're looking at the account. It's got more zeros than you've ever seen in your entire life. And they're like, okay, put down your first trade. Okay, I'll put down $200 million on this euro dollar trade. And I'll put $400 million. They're like, oh my God. Yeah. Yeah. So get really good at being small. Okay. Make trades with low risk, but make trades that are smart. So again, quantitatively, trading CAD, Euro CAD makes no sense. You're like, well, I made money on it today. Well, good for you. Aren't you a sweetheart? One of them just happened to be more weak than the other. Well, good for you. You missed all the good trades though. And that's where you got to be better, right? You don't want to put 300 million on Euro CAD and find out it moved 12 pips while other things are booming, right? So what was I saying? Euro CAD. So Euro CAD would have been down this week. Oh, good. Still a dumb trade quantitatively. But, maybe it was the greatest trade ever for 2 days. Okay. Not ready yet. We're at all-time highs and it's heavy. Little love for the S&P though, huh? That's cool. So I like gold. I like gold when it was falling. And I like gold even more when it's rising. Okay, pop quiz, everybody. I want you to answer. Because remember, this is about all of us improving. When gold was falling for months and months, it fell over $1,000 an ounce. Were institutional investors long or short gold while it was falling more than 1,000 an ounce. Long or short? I want you to answer. You're teaching yourself. I preach to teach. Cool. And so what are they doing now? Things have changed. We hit a psych level of 4,000. Now what's happening? They're adding to their positions. This might have legs. They're long and they're buying more. When the price was falling, institutional investors were not dumping their positions. Yeah. You're like, well, Wayne, what happened? Gold dropped more than $1,000 and institutional investors were not selling? No. No, they were not. Well, how is that even possible? Well, maybe retail was selling. You'd have to check the COT report. But also, what happened when gold went up? Up and up and up and up. Dollar was weak. Then, when the price of gold fell from 5,200 all the way down to 4,000, institutional investors were not selling. But the dollar was getting strong. Part of this equation was simply the $1 because it was the purchasing power of the dollar was getting stronger, could buy more gold. But institutional investors kept their gold in the vault. Okay. It's very cool what this information is showing us. And we love to spend time even over the weekend. Okay. Yes, I cover all of this on Monday. You should be doing this over the weekend. Yeah. Silver, it's got a bid. Gold. Oil. Uh-huh. Interesting, huh? Oil slightly bullish with some selling. It's not interesting to institutional investors. They're doing something else with their money. Now, it doesn't mean you can't trade it, but what I've been saying is, we're caught between geopolitics and seasonality and supply and demand. I guess that's a trifecta. And it's very difficult to trade because you can be short, which would be normal, and then all of a sudden something happens and the market pops. You see? And just out of the blue, boom, something unusual happens, kills your position. So in this case, they're like, yeah, we don't want to even go there. Now, there might be hedgers, but we've taken the hedgers out. Remember that? These calculations do not include bona fide hedgers. And guess what? What does this say? Check this out. The Fed is not going to change interest rates, according to institutional investors. And yields are going up. It's kind of cool. Now, this isn't measuring the yield curve. We do that somewhere else. We're not measuring the spread. This is just measuring institutional positioning. Okay. They believe the treasury market will fall and yields will rise. Is that happening? Yeah. But something is changing. And it's been changing just in the last 24 to 48 hours of trading, so not including the weekend. What happened here? This is proof, inside information. Tells you that very, very large, very, very sophisticated investors have just told you through their voting with their money that the Fed is not going to raise interest rates at the September meeting. There it is. You see, there it is. This is us now measuring multiple times a day the flow of capital in and out of the treasury market, and then doing yield curve analysis and spread analysis and all the other things that go into it. We have buyers here at the short end of the yield curve. Cool. It's going to slowly flatten out some of this yield curve. Kind of neat, right? There it is, guys. There's the source of truth, inside information. It's legal and ethical. There it is. Now, most Forex traders don't do yield curve analysis, and they certainly don't do it multiple times a day. What does this tell you? Dollar should weaken. This is what we're talking about 3 or 4 weeks ago when the dollar was at 101, and every single one of these bars were bearish, meaning every part of the yield curve was being sold. But soon as buyers came back, the dollar weakened. This is why we do it. Okay, red, dollar strength. Green, dollar weakness. Yeah. So that euro dollar trade you've been thinking about, well, the euro is generally weak and the dollar is going from strong to weak. Maybe that's not the right trade. But what about that Aussie dollar? We're bullish on Aussie, and if US dollar weakens because we get a risk on play, well, hell's bells, that Australian dollar versus American dollar might be a good buy a dip scenario. Why? So now you're talking with your investors, and they're like, well, why are you doing that? Well, I've been analyzing the yield curve. Is one part of it. I've been analyzing institutional investor positioning and changes in flow. Oh, yeah. Yeah, cool. Mix that with some seasonality. Okay. This is what I'm building up for. And some of my boards, they're getting antsy. The stock market's going up. The stock market's going up. Uh-huh. How come you're not buying the stock market? The stock market's going up. I buy when it's red, not green. But this is how most people think, right? So no joke. I manage endowment money, and people are freaking out. It's up. It's up. You should be buying. We have all this cash. Shh. Okay. What's coming? A storm. I'm preparing for a storm. 60% of the time, it loses every time. Now, think of this. If I'm wrong and the stock market continues going up, they're like, how come you didn't buy? I'm like, well, I guess I'm too conservative. I win. Nothing wrong when you're managing endowment money. You're like, well, I was conservative. I played it safe. But if it drops and I buy a dip, I just might be the hero of the day. But this is legal and ethical insider information? No. But I'm telling you how easy it is to get the data to say, yeah, you could moderately be bullish here. You could be moderately. We're looking at Aussie. We're looking at dollar. It is the best, right? Or is a good setup based on current market conditions. But historically, it's been benign. And that's how I remember it. Benign. And September down. That's actually how I remember it. I'm anticipating dollar strength. I'm anticipating the NASDAQ coming down. And in my charitable endowments, we're sitting on a huge pile of cash relative to the account size, like 10%. We're in 10% cash. Yeah, that's a lot of money. Cool. Because this might be coming. It's like, should we go on a cruise to the Caribbean? There's some good deals out there. When I look at them like, oh my God, but that's the middle of hurricane season. And I have to buy a year in advance? Well, what if I thought there was a high probability I get on the ship, we go to the Caribbean, there's some probability that we just get a direct hit by the hurricane. Oh my God. Or there's a higher probability of just really bad weather and choppy seas where the boat is rocking and listing and people are puking all over the place. And they're like, oh my God, I have to pay money for that? And then there's some probability that nothing happens. Okay, but I can go in another period of the year where the probability is nothing happens. It's blue skies, clear water, zero probability of a hurricane. So know what you're doing. So right now, we're approaching hurricane season with many of these assets, and I understand that. And I'm prepared for it. Right? I've gone to Home Depot 3 months before hurricane season. Windows. I bought fresh water. only last few years. You got canned food and make sure you got clean blankets. Make sure you have, I don't know, cell phone batteries, regular batteries, your crank up emergency radio, maybe walkie talkies and their batteries. Make sure you got a gun, some bullets, some money, and a baseball bat. You prepare before the hurricane shows up. Now, most people don't do this. The hurricane shows up and they're desperate. So all I'm saying is, if I thought there's a much higher probability of a hurricane, I should prepare now. This is why this analysis is here. I built this. I built all of this for us. So I'm like, okay, how does Aussie dollar do now? But I'm more interested in this because we've already kind of made our money over here. So what should I be doing? What should I be preparing for? That's the secret sauce, my friend. And yeah, a month ago, the custodian for one of the endowments called, and he's like, we got a bunch of cash. A bond got called because you can have some callable bonds, so you have call risk. So we got called, and suddenly we got this pile of cash. And he said, what do you want me to buy? I said, put it in a high yield cash account. He's like, wait, you don't want to buy more shares? I'm like, no. How much does your high yield pay? 3.75. I'm like, yeah, park it there. For how long? Till the third week of September. Flabbergasted. Yeah. Yeah. Now the custodian, he doesn't understand. No, he's a professional money manager, but he doesn't understand. So then I get messages from him, and now it's third week of August. Oh my God, what should we do? He calls the chairman of the board. The chairman pings me like, oh, we got all this cash. I'm like, shh. Third week of September. So we know everybody else doesn't. So if you chase aggression right now, you might do very well. You might have swung hard and hit a home run, and I congratulate you for that. Bravo, but it's not likely. Sometimes you just need to get on base. In this case, look, this is probably coming. A peak in August and a drop in September. And when we roll into September will move over here, and I will show you the October pattern. And then you will fully understand why I say the third week of September. Then maybe things change. Maybe it's the second week. Maybe it's the fourth week. Maybe the election changes everything. Yeah, that's a lot of maybes. So this is where I err on the side of caution. And all of this, by the way, is all leading up to how do you make a trade today? Let me ask you, does this data tell you should be aggressive in August, even if Aussie dollar is going up? Niet. Hey, Aussie dollar's going up. Good for you. Use a stop. Hey, if you hit, what else does this say? Standard deviation, 2.6 to negative 2.4. Hey, if this rolls up, okay, remember these are Okay. This is important stuff. If it's up and you hit profit targets, okay, they give it back and then drop. So if you had a 2.6% peak, that's the best it's ever done in this period. It will fall well into September. Okay. So look at this. You have to understand the standard deviation calculations. So let's say you're lucky and you find yourself at a monthly R2 and you're up 1%. That's about right. And do I have to test you on mean, median, and mode? But anyways, you're doing good. Guess what? It's going to drop from a positive 1 to a negative 1. And if you didn't know this, if you were just playing your gut, you have the potential to give all your profit back and then continue to lose money. Or some variation of it, right? So now you have to say, well, if I'm at resistance, how do I treat it? I'd be extraordinarily conservative, even though you might have had an amazing month. Sorry. You might have had an amazing month, but you need to prepare for a whole new world. Just imagine you're laying in the, let's use the Caribbean again. You're laying on the beach. There's not a cloud in the sky. It's all blue. The water's wonderful. You're glistening, all oiled up. Yeah. Your belly button rings sparkling in the Caribbean sun. You can't see that 500 miles away is something that could be the end of the world. The biggest, nastiest hurricane to ever hit, according to CNN. It's 1,000 miles away. It's come off the coast of Africa. It's coming in low, moving up. It's going to try to get to us, because it has to decide, go below the Caribbean and come up, Jamaica, Mexico area, or if it's going to go over, this way and hit Puerto Rico, Dominican Republic, Haiti, Cuba, the Bahamas. Is it going to come up that way? All this is decided, right? And you can get this at NOAA, the Hurricane Center. Oh, that's interesting. I guess I haven't pulled it up in a while. Okay, look, there's no hurricanes. What if, okay, this is what I'm trying to share. What if you're sitting, where should I put you? There's a nice beach right here, huh? All right, let's do that in pink. Okay, you're sitting right here. Nice little beach town there. And we see this coming. You will not know. The waves won't be high. Probably have no clouds, no wind. There's a nasty thing coming. If you only knew, you would change your behavior. I hope. Well, I didn't say the start of September. No. Okay. So you should change your behavior. And if you're here, okay, or if you're here, okay, or if you're here, you should probably change your behavior. And here, don't worry about it. In a scenario like this, don't worry about it. There's no disturbances. Okay. So what I'm trying to say is there's something coming. We just don't know if it's going to hit you or not. What should you do? Okay. It's kind of like this where we're bearish Ethereum based on probabilities. We're bearish on Bitcoin based on probabilities. Okay. What about WTI? Normally we're bearish, but we have geopolitics. So this isn't a prediction, it's just a fact. Gold goes up. Oh, are we making money on gold? Yeah, we're up 4,000 to 4,500. All right, we're up 10, 12%. Sweet. Good. Good to know. Yeah, well, I'm long gold. I also made decisions not just on the month, but I've been long gold for a while because of institutional positioning. Cool. All of this could be yours. Yeah. How does this make you feel? I'm leaning on, okay, now most of Tradars is not offering you forecasting. Okay, going back 20 years of data is not forecasting. But I'm bringing more and more forecasting because, in fact, just yesterday, I spent 9 hours. Yesterday, I spent 9 hours working on our neural network. So don't tell me you don't have time to review the COT report on the weekends. But anyways, the reason for it is Aiden is using machine learning, which is just one aspect of a neural network, but he's kind of aware, if you want to think of it that way. And he's studying past performance and current market conditions and building better and better decision-making process on, in this case, gold prices. He's using market data, real-time market data, but also remembers the context of the last 20 years. It's pretty cool. Yeah, it's very cool. And in fact, I kind of broke the construct of the neural network because we're doing so complicated mathematics and other, how you say, just compute is the language now. Just we're using so much compute that I've actually had to upgrade everything. And that was something else I did over the weekend. Yeah. So I had to use the DeepSeek framework. So there's a framework for AI, right? So you got to look at the framework of building a large language model. There's just like an infrastructure, if you will. And so I'm using the DeepSeek infrastructure and to host Aiden's brain because it's gotten so big that you can't just kind of loosey-goosey do it anymore. So now we're using that DeepSeek framework which is specifically designed for our relational mathematics and relational economics, and is also specializes in analyzing its performance as a trader and leveraging that performance for machine learning. So like, dude, like I know every time we meet, I tell you it's amazing. It's another leap forward. Um, and the machine that is now running Aiden's brain is getting massively powerful. Yeah, massive amounts of RAM and massive amounts of compute. Like, dude, it's just getting huge. So, anyways, all of this, what does it mean to you? With all known information for the last 20 years down to 15-minute candles, his brain is so well organized. Remember, we use decision trees even just into our intake into our LLM. So like the neural network is amazing. So now he's takes all of this context, which no human could ever possibly know, you know, the price of gold June 17th, 2002, and what it was doing and all that kind of stuff. He can. So, anyways, look, we're going to 4,817 by the end of the year. This is just linear projection. This is a dumb algorithm. This is the way the math used to work. So I think maybe I should even get rid of this term and just show it as direction. And this is Aiden actually thinking. And notice that it's not a straight line. This is a straight line because it's dumb. It's just dumb. It's an algorithm. It's dumb. There's no brain. There's no analysis. And Aiden isn't even doing this because it's just math. So it's just sits on our server and does the math. And there's the math. Boom. That's what the math pumps out. This is Aiden thinking. Okay. And notice it's not straight. So he's adjusting for all the different data. Yeah. It's really cool. So I'd like to bring more and more of that throughout, where it's like, well, Aiden, what do you think about the next three months? Let's say, when do you think gold will be at the end of the year? Oh, I'll show you. Okay, silver's the laggard. Probably want to trade it. Headwind for gold. Everybody's freaking out about inflation. But we don't see it as being that problematic. So, the Fed's got to raise, the Fed's got to raise, the Fed's got to raise. And the whole time I'm like, no, that doesn't make any sense. Even this analysis is like, no, that doesn't make any sense. And now we're seeing the yield curve change, and we can see it in all our data that institutional investors are now agreeing with us. What about retail traders if institutional investors are just figuring it out? Oy vey. So let's organize our thoughts here. Kiwi's strong today. I don't care. Aussie's strong today. Okay, that's good. Swissy's strong. I don't like that. Euro is flat. Yeah, we already know. Euro is nothing. Nobody cares about euro. Sorry, Europeans. CAD, benign. Yeah, I guess oil hasn't really moved. What time is it? Yeah, the market's just open. Pound and dollar weak and yen is weak, which is fantastic. That's what I want. I don't know if it'll last, but it's what I want in the long run. So some Aussie would be the focus for me. Aussie yen long, Aussie dollar long. But I also showed you that I need to be prepared for the hurricane. So I might be in the Caribbean, but I got to be prepared. Crypto's down. Of course it's down. We talked about it last week and the week before. So for 2 weeks now, every single day, I'm like, wah, wah, wah on crypto. Not my opinion. I don't, my opinion? I don't have an opinion. We're playing the odds, right? This is what I'm trying to get across every day. We're playing the odds. We're playing the game well. What's the game? The probabilities show that crypto is going to be down significantly in the month of August. Cool. So I'm like, I guess I will do that. Cool. Gold is up. Great. Or metals are up. So our analysis says, hey, if you're bullish gold, you might also want to go silver. It's cheaper. Cool. So our bias has been bullish on metals for a very long time. For the last 2 weeks, we've been bearish on crypto. Okay. I want dollar to weaken. I want yen to weaken. I want Swissy to weaken. I want Aussie to go up. These are things that I know. Now, if I know these things because I've done the research, then I can see the mirage. I'm like, oh, wow, look at that Kiwi. And maybe it's news related. Maybe it's not. Maybe it's short covering. I don't know. The thing is, I don't know if that's worth my time today. As Mahai says, well, maybe that's have it up today, sell tomorrow. Yeah. If I go out to position trading, okay, Kiwi's just flat. Yeah. As I covered yesterday, my preference is swing trading. So I like this. Aussie dollar up, I like. Japanese yen short, I like. Dollar weakness, it's slightly weak. Okay. I expected it to get strong next month. So that could mean between now and October. So I look at this and say, well, not today. Good. I expect nothing from euro. Great. Kiwi, I'm not a bull on. In fact, I'm a bear. All right. Well, okay. It's just farting around. But if it ever turns hardcore bearish, oh, I should probably sell it. Now, think about this. Let's talk about 3 weeks from now. Let's say everything goes as historically normal, which I doubt this year, by the way, because of the election. But let's just say 2 weeks from now, 3 weeks from now, Kiwi dollar is hard red, okay, and US dollar is hard green. That's everything we've already talked about. Am I selling Kiwi dollar? Oh my God. Oh my God. For sure. Am I doing that today? No. It's cool to have trade plans, right? Geopolitics pushing oil up. This week has been up, up, up. We're not at 70. We're at 85. That's going to benefit Kenyatta. So do you guys just sit on this chart? There are plenty of charts for you to sit on. Just sit and have this. You can do this one. Too much information? Do it this way. Okay. Conviction scores are low across the board. I like using our squawk box.
Wall Street poised to open broadly up.
Indian rupee, RBI move tightens liquidity. BNY.
Bond market holds range as dovish US data clash with Persian Gulf supply risks. Japan. BOJ path questioned on weak demand. Societe Generale. Euro yen price.
And you can just
Forecast. Bullseye
Go about your business
185 Cerberus resistance area.
Economists agree. Fed to leave interest rates unchanged this year. Reuters poll.
Zcash price. Forecast. ZEX extends gains amid rising retail strength.
Dude, just so easy.
Ironwood
Look at
pool
that.
adoption. Japanese yen. Intervention risk near 160 highlighted. DBS.
Gold holds near $4,400 as fading Fed rate hike bets weigh on US dollar.
Canadian dollar gains ground with inflation data, set to test Bank of Canada outlook.
Turkey, from currency crisis to inflation culture.
Japanese yen. Policy doubts weigh on yen. BNY.
Canadian dollar firms after hotter than expected inflation data.
New York Manufacturing Index unexpectedly jumps to over 4-year high in August.
Corn futures edge up as traders await pro-farmer crop tour. Wheat futures fall on profit-taking despite Black Sea tensions.
Canadian dollar struggles against euro as inflation accelerates to 3%. China. Fiscal support to offset weak demand. Standard Chartered.
New Zealand dollar hits 2-month high as US dollar weakness offsets softer China data. Taiwan, strong double-digit GDP expansion to persist. DBS.
Cool, right? All right, so we've been ridiculously bullish on the Japanese stock market for a very long time. And I've showed over and over again, okay, walking up the stairway to heaven. Yeah. And then when we started the webinar this morning, we were on the 5-minute chart. I was zoomed in over here. And I'm like, hey, kids, do you remember this? Look, green zone means up. So one of the topics I was asked to cover today is how do you pull the trigger? Well, if you don't know you're a bull, you'll never know when to pull the trigger. That's the first thing. Okay. So, okay. Now, the second thing is, if you're a bull, what are the two buying prices for today? So now you have to know some technical analysis. There are two prices. This is the best price, and this is the second best price. Now, we don't know the time, so that occurred here. Well, we don't know that. And is this the best price to buy? No, you buy on pullback. So this would have been the actual time. And that's where we started. And that's where I yelled, hey, kids. Remember I showed you Nikkei was way up. So then I started my charts. Remember this? And then I pulled up and here was the Nikkei. And we were right in here. And I yelled, hey, kids. The green zone means up. But if you didn't know you're a bull, then it's worthless. But we've been bullish for a very, very long time. So therefore, you understand the context of this. So when do you pull the trigger? Yeah, when do you pull the trigger? How much more do you need than on this 5-minute chart, a double bottom, higher high, higher low? Do you need more than that? Why? Where do you put your stop? Below support. It's in the book, it's in the training course, it's in the free videos. I cover it every day. You should know this. You buy a dip. Does anybody know the secret word for this pattern? There's a secret word for previous training where I said you should practice this over and 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 over again until you can do it in your sleep. And then I usually tell the story of an FX boot camper who was struggling with discipline and consistency. So I said, well, just do this one pattern exclusively 100 times in a row. So you'll be patient, you'll be disciplined, but you'll also be very good at waiting and finding these patterns. And also you'll know whether they seem to be successful for you or not, and you can improve. And because you're an expert in this thing, you can start to anticipate when and where they form. Does anybody know the secret word, or has it all been lost in your gray matter? I'd be shocked, maybe even emotionally devastated if you guys have forgotten. Hammock. Thank you. Hammock. Good. So, there you go. There's one opportunity. What's the second opportunity when you make a higher high? Look at the consolidation. Up, up, up. Okay, great. Same thing as here. Okay, you look left and you want to look at this, these, oops, okay, as potentials, but we're also using pivot points in our theory. So you also want to use this, which is what? That's our central pivot point. This is our M2, the best price you could hope for. Because remember, you started the day bullish because you were bullish on Friday. You were bullish on Thursday. You were bullish on Wednesday. You were bullish 7 weeks ago. You're bullish. There's no ambiguity here. Okay? You're a bull. Cool. So, what's the logical? The logical is the confluence of these dots. When now? When do you think it's going to happen? New York. New York. So we log in. I farted around with some technical problems, so it wasn't even until like 8:15 or something that I finally get going. So this is well into the New York Open. And I yell, hey, kids, look, green means up. And it went up. Really? So when do you pull the trigger? Yes, when do you pull the trigger? Okay. When do you make the decision? There's so many different ways. I don't even care which one. It doesn't matter. Maybe the time frame and all that kind of stuff. Oil prices tick higher after strong week as Iran jitters persist.
Gold edges higher amid softer dollar, easing Fed rate hike wagers.
So the most conservative is this one. Okay. Now, the other thing that you should be really good at is identifying support and resistance. Okay. Now this is price action. This is moving averages. Okay. Easy peasy lemon squeezy. So that's enough. Okay. 5-8 cross, 2155 cross. Fine. It's a 5-minute chart. You don't have to make it overly complicated. You've been bullish for months. You already recognize that this is a higher high. You already know you want to buy a higher low. It just triple bottomed on the central pivot point, for crying out loud. My gosh. Okay. So now you can also use the price action point part. Okay. Down. Okay. Now you got yourself a range. Breakout, pullback, long and gone. Again, just very, very basic, simple price action. Price action 101. Kindergarten crayon stuff. But you could have been sloppy here. You could have just thrown down a buy order. But you can be, right? Very, very simple about it. Oops. Okay. There we go. Okay. So this could have been enough. The breach could have been enough. You don't need that much. If you already know. See, don't get caught in the technical analysis. What I'm saying is, you can do it my way, you could do it your way, it'll be fine. But if you know you're a bull and you know how to buy a higher low, everything else becomes simplified. Now, when I yelled, "Hey, everybody," right? Green zone means up. If you had been a bull, quantitatively, mathematically, seasonally, if you had been a bull, that would have been screaming at you. So don't get caught up on the technical analysis. You want your technicals to be so simple. So simple. It could be practically a naked chart. I love pivot points, though. Okay. But like, let's do something different now. I don't think I'd do it this way if I were me, but let's say which one? XRP holds 1.4 key support as modest ETF inflows temper bearish trend. That's not what I was going for, but let's see. I want Canadian dollar inflation steady near target, RBC. How simple do I want this? That's not right. How should I teach this? Should I do it as a swing? Or day trade? Probably day trade. Okay. Yeah, I guess it just makes sense to do it this way. And we don't need the moving averages, right? Do we? Just wondering. I mean, again, I love pivot points. Oh my God. Because they're doing so much of the work. Pivot points aren't magic. They're just doing implied volatility kind of stuff. Indicator, bias pivots. Okay, so we do price action, right? We're bulls. Okay, where do we buy? Okay, when the pivots start rising. When do the pivots rise? Oh, that's easy mathematics, isn't it? With a higher high. So you never catch this first one unless you're super aggressive. I don't trade triple bottoms. What did I just tell you half an hour ago? I trade triple bottoms after a higher high. Now I want you to, this is important what I'm taking you through. So I want you to confirm you remember me saying this. Do you remember me saying I like to buy double bottoms or triple bottoms or quadruple bottoms after it has made a higher high? Then I buy a higher low. I do not buy double bottoms. I do not buy triple bottoms. I do not buy quadruple bottoms. You could. I don't. I'm conservative. Now, you have to remember these things for them to work. Okay, cool. So we get a higher high. WWWD. What would Wayne do? Okay. This is price action. This is pivot points. Cool. Then what? It made a higher high. Okay, WWWD. What would Wayne do? Okay. Price action, pivot points. Cool. Then what? Higher high. WWWD. What would Wayne do? Okay. Because of pivot points, because of price action. They're kind of the same thing over and over and over again. Yep. Then it made a higher high. WWWD. What would Wayne do? Da, 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 or the whole area, right? So I'll take the bottom of it, da, 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 somewhere around there. Cool. If we're lucky, it'll continue up. If we're unlucky, it'll fizzle out. But I don't know. Do you know? I don't. But do you see the trading? You would never, ever, ever have looked at this chart unless you knew to be bullish on this asset. I don't even care what asset. This has nothing to do with the Japanese stock market in the sense of what I just did. This is the only way I know how to trade. It's the only way I've taught how to trade. Price action, averages. money. Cool. Let's do it. Okay, I'm a bull. Is this a buy? No. Is this a buy? No. Is this a buy? No. Higher high? Cool. Somewhere around here. Right? Cool. So this is a buy. There's no doubt about it. That's just basic price action 101. Cool. Higher high. What am I going to do? Buy a higher low somewhere around here. Now, might be a little bit above it. It might be a little bit below it, but it shouldn't be lower low. Cool. Higher high. What do I do now? Well, price action is all I got. Pivot points would have been good, but I could Leonardo Fibonacci this sucker. And what are you going to get? A pivot point. Higher high. Higher low. Okay, cool. Okay. See, this one you either missed using price action. Okay, and that's why you have, price action is enough. But if you're doing Fibonacci, remember the way I teach it is from the higher highs, right? So actually, let me get rid of this one. Did you guys click thumbs up? Are you telling me this is what you want me to do every morning? Remember, we're not just colleagues, but you're my boss. Okay, great. So now what? Now it makes a new higher high. Because remember, we're measuring this, aren't we? Oh, new higher high. So you wait for the pullback, and then what? You measure that one. Okay? You can measure from the bottom. You can measure from the breakout. You do you. Okay? Makes a new higher high. Pulls back. And this one would have been dangerous, right? No. 382 means you're aggressive. 618 means you're conservative. But also, I have to tell you, I don't use Fibonacci because it's BS. Okay? When you hear a YouTube guru talk about how magic Fibonacci is and it's all based on the laws of nature, it's all based on how, the cherry blossom and the tortoise shell. Dude. Okay, come on. You can't be a gullible. You can't be a ninkau poop. So mine is set to 33.66. I don't even use Fibonacci. Who cares? Buy a dip. There's no magic. Sorry. If you want magic, go to Disneyland. So I then, over the years, added some layers. Because, drawing all these Fibonacci's, they take time. And then you're doing Fibonacci's of Fibonacci's. And then you're doing Fib Wars. Euro, bullish momentum. Eyes mid 1.17s against US dollar, Scotiabank. So I used Fibonacci first, and then I learned about Elliott Wave, and I'm like, dude, this guy wasn't a genius. He was just doing Elliott Wave and price action. maybe that made me a genius. I don't think so. But I'm like, oh, this Elliott wave stuff, it's just price action with some Fibonacci. And I'm like, well, I already do that. But I don't use waves because I hate counting. It's not my personality to say, oh, well, this was a 3-wave and this is a correction. And then this is I don't think like an accountant. I've passed all the accounting classes and I still don't get it. So what could I do that fits my personality? Insert, indicators, custom, and I made my own biased pivot points. Because one of the lines is going to work, right? So I'm like, no. I have to make a stand here. I have to have a bias. If I don't have a bias, I'm just a broke ass trader. Remember, you have to be a bull, a bear, or a bat. Bulls buy higher lows. Bears sell lower highs. Bats are broke ass traders. So I'm a bull on Nikkei. Have been for a very long time. Cool. So buy, and we'll see what happens tomorrow. But if you don't even know what asset, here's what happens, guys. You pick a mediocre asset and it doesn't work this well. It works less well because you picked the wrong asset. Nobody else is trading it. You're doing it all on your own. So I guess we could pick on euro dollar today. Okay. And refresh it out. And yeah, well, look at this. The higher high, higher low stuff. Like, okay. So no, you can't buy. No, you can't buy. No, you can't buy. No, you can't buy. Did you know that this one, under the rules of engagement, this is a buy? Not this one. Not this one. Not this one. Not this one. You might have tried this one. Oh my God, you took a loss? That's so sad. You had a losing trade, right? That happens. But it never made a lower low. But whatever, they can't all be winners. But under the rules of engagement, look at that. Okay. And what about now, guys? Did it make a higher high? Let's zoom in. Yeah. Yeah, baby. Yeah. So do whatever you want to do. Do you want to treat it? You want to be ultra conservative on a 5-minute chart? Yeah, be ultra conservative. Okay, 50% retracement, 50% retracement, 50% retracement, 50% retracement. What do you want to do now? What's your plan? Wayne, I want to trap it in here. Cool. So what are you going to set up next? A hammock. Am I right? You know what's interesting about this 5-minute chart? I'm going to leave you with this thought. It's tomorrow's trade. It's tomorrow's trade. Today's trade's already done. We hit that here. Dude, that was so hours ago. This is for Tuesday. What? Yeah. At current market conditions, Let's get rid of this. Like you roll, you're still get the first minute of the day. What's the target? The actual target is this. That's your best case scenario, by the way, mathematically. Okay. If this is your bottom, that is your top. If this is your bottom, that is your top. What about lower lows? No. We're bulls. There are no lower lows. This is the power. I'm teaching you. You're a bull, you're a bear, or you're a broke ass trader because you don't even make decisions. Your trades are worthless. They have no value. You're losing money because you're not adding value. You've done no analysis. You have no idea what you're doing. And you're trying to make money from how? How is trading going to make you money if you can't make a decision? You have no value. You're a liquidity event for those that have trade plans. So if you were a bear, you would not have had a trade today. You're going to wait for it to make lower lows and lower highs. It's not a market like that right now. I don't like euro dollar. You know that. I showed you. If you were trading it, it's not a good trade, but you'd be making money if you knew what you were doing. There's a big difference, right? So, again, one of the questions was, how do you pull the trigger? You could have just had an order sitting there on Friday because it made a high and you're going to swing trade it. I mean, is that sloppy? Yeah, but I didn't say it had to be pretty. I didn't say it had to be glorious. I didn't say it had to be a work of art. Do you have to use pivot points or can you use Fibonacci? Yeah, okay. Buy it at a 382. Great. Okay. But knowing you're a bull or a bear is the whole game. The whole game. Because you know what a lower high looks like, don't you? Well, especially, do you need a double top first? Preferably. Do you need a triple top? Even better. How about a lower low? I'm going to sell that lower high because I'm a bear and watch me drop it like it's hot. But you need patience and discipline, but you also need a brain. You need data. You need to know what's going on. You need to have a stand. What's your opinion? Right? Well, I don't know much, but I want to buy the Aussie dollar and I want to sell the Kiwi. Look how it's less bearish than it used to be. Ooh, that might be good. Okay. Look, Euro, not great. Aussie, love it right now. Leader, Aussie. Laggard, Kiwi. But notice it's been changing. It's been changing. That's also good. Okay, now, you make good decisions. Look at the good decisions, guys. Okay. New Zealand is a hot mess. Canada is a mixed bag. United States doing pretty well. Aussies are our best bet right now. What do we also expect to happen? Dollar's going to strengthen in the next 6 weeks. So how will I adjust if I'm watching euro dollar? I'll pick on euro again. What if I thought somewhere in the next 6 weeks, euro dollar was going to turn bearish. Well, first of all, I'm going to need some pivot points. Okay. So this comes down. This comes up. This comes down. This comes up. We're approaching the end of August. This comes down. I'm selling for the next 4 weeks. Do you understand? Sell, 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 sell. Probably down to here. And then I will check my seasonality for euro dollar in October. Let's just do that quickly. I'll show you how easy it is. Okay, let's check it. October's no good. November's okay. September's terrible. So I may not buy it back quickly. I might have to wait closer to the election and then buy it then. See? But at least I know get out a euro dollar long, even though I'm making money on euro dollar long. Oh my God. That's how we do it here. That's the only way I know how to trade this or anything. It's the only way I know how to trade. Now, let me leave you with one last thought. This is how I taught myself how to trade 25 years ago. Doing things like maybe not seasonality. I learned that later on. But this, for example, this would take me an hour every single day before I made even one trade. Okay, the Commitment to Traders report. Every week, it took me a whole day to do this. When I first started trading, there was no technical analysis. People used it, but again, I remember one woman was teaching and she kept saying MACD, the MACD, the MA, it's a MACD. Like people were teaching that didn't even know what it meant. They were just gurus that showed up and they didn't even know anything about it. I'm like, Gerald Appel invented the MACD, the MACD. And then the guru was then teaching trading strategies. And that's not even how it was used. So I'm sure all those people lost money. Also, one of the first investing conferences I ever went to was John Bollinger was a speaker, and he's like, hey, I'm seeing all this stuff about people are like being taught how to ride the bands. He's like, I never did any of that. That doesn't make any sense to me. That's not why I created this tool. The gurus get in there and mess it all up with their get rich quick kind of stuff. I started by quantitatively analyzing the overnight volatility. And then I created synthetic currency indices. Yeah. And I downloaded every week the COT report and had to go through it manually with highlighters and a calculator and would spend a day. So nothing has changed except it's exponentially easier to do. The last step is use your technical analysis, not to make a trading decision, to tell you buy a dip. Okay. And think about it this way. If, right, I showed you things like the higher high, right? So you get a higher high. What do you know? You want to buy a dip. So you know it's coming down. Okay. Does it come down here? That might be interesting. Down here, that's way more interesting. Down here, you're out. So two things occurred. For whatever reason, you bought here because you were aggressive, or you bought here because you were using price action. Either way, there's no business for price to be lower than this. So the stop is easy. The entry should be easy, especially if you're using price action. Fibonacci says, well, it could be this one, it could be this one, it could be this one. Okay, and pivot points might do the same thing, right? They might say this is the buy zone. All right, whatever. Doesn't matter. Whatever you decide is right. I really want you to understand that searching for different indicators and different techniques is not going to make you a better trader. So if it drops and then on a small time frame, it does this, and you buy it, that's a good trade. That's it. When it drops, you see how today I went from a 30-minute chart to a 5-minute chart? I hope you noticed that. And now I'm trading this on a 5-minute chart? Yeah. Why does it work? Because it's a bullish market, and it's obviously so. Don't overcomplicate it. The number one thing that you should focus on is the asset selection. Once you got that down, what does it tell you? That asset is trending, which means if you get this one right, you probably get the next one right. Why? That is the definition of a trend. What's the definition of a trend? Right? Lower low, higher high, higher low, higher high, higher low. What's probably going to happen next? Higher high, and then what are you going to do? Higher low, where? Well, I don't know, somewhere around here, just above that or just below it. But if price comes down here, okay, I'm getting out of this one for a profit. I'm getting out of this one for a profit. This one got knocked out at break even, and this one took a loss. All right, too bad, so sad. Data first. Knowing what asset to trade is going to be the difference between, let's say, a 25 pip trade and a 75 pip trade. The same day, the same hour, similar pairs. Okay, you traded euro yen, you should have traded pound yen. The same trade, same time, one took off, one was slow. You had a mediocre decision-making process. Same time. Wow. Strong.